Urgent ATM Notice April to May 2026. Pensioners face 3 new withdrawal restrictions. Act now. Right now, across the entire United Kingdom, millions of pensioners are standing at cash machines, inserting their cards and getting a very different experience than they expected. Some are being blocked. Some are being asked to call their bank before they can take out their own money, and some are walking away from ATMs confused, worried, and without the cash they urgently needed. If you are one of those people, or if you are worried this could happen to you, you are in exactly the right place, because in the next few minutes we are going to break down everything that is happening, why it is happening, and most importantly, what you need to do about it before it disrupts your finances. This is not scaremongering, this is not clickbait. These changes are real. They are already affecting people right now in April and May of 2026, and the people who are being caught off guard the most are pensioners who depend on regular cash withdrawals to manage their daily lives. So stay with us through every single word of this video, because by the end you will know exactly where you stand, what the rules actually say, and the precise steps you need to take to make sure your money is always accessible when you need it. Let us start with something important that nobody else is clearly telling you. There is no single government law that has come in overnight and slapped every pensioner in Britain with a universal cash withdrawal ban. That is not what is happening. What is actually happening is both more nuanced and in many ways more urgent to understand, because it affects you just as much, and in some cases even more so than a straightforward rule change would. Let us start with something important that nobody else is clearly telling you. There is no single government law that has come in overnight and slapped every pensioner in Britain with a universal cash withdrawal ban. That is not what is happening. What is actually happening is both more nuanced and, in many ways, more urgent to understand, because it affects you just as much, and in some cases even more so than a straightforward rule change would. What we have in April and May 2026 is a wave of bank-level policy changes, fraud prevention updates, and DWP administrative requirements landing at the same time, creating what amounts to 3 very real and very significant new withdrawal restrictions that pensioners need to know about immediately. The first restriction: daily ATM withdrawal caps have been lowered for over 60s. Let us talk about the most immediate change first, the one you are most likely to encounter the next time you walk up to a cash machine. Across major UK high street banks, including Barclays, HSBC, NatWest, Santander and Lloyds, daily ATM withdrawal limits have been quietly revised downward, particularly for account holders in the over 60 age bracket. Previously, many standard accounts allowed customers to withdraw anywhere between £500 and £700 per day. Under the updated policies now being applied in spring 2026, many over 60s accounts are being capped at between £250 and £500 per day, depending on the specific bank and the type of account you hold. Now, you might be thinking, that still sounds like enough, and for most pensioners who withdraw small amounts every few days, it probably will be. But here is where the problem starts to bite. Think about a situation where you need cash urgently. Maybe a plumber needs to be paid. Maybe a family member needs emergency funds. Maybe you are paying for a home repair or a medical appointment. In those moments, you try to withdraw £600 or £700 as you normally would, and the machine simply refuses. No explanation, just a decline. And if you do not know why that is happening, if no one told you the rules had changed, it can be genuinely frightening. There is an additional layer to this that makes things even more complicated. Many cash machines themselves have a per-transaction maximum that is separate from your daily limit. Even if your daily limit is £500, The ATM might only allow you to take out £200 or £250 in a single transaction. That means you may need to withdraw multiple times, which still counts against your daily total. For pensioners who are not checking their banking apps regularly or who do not use mobile banking at all, this creates a situation where they are trying to understand rules that nobody formally told them had changed. What you need to do right now is contact your bank, whether by phone, online banking, or by walking into a branch, and ask them one very direct question. What is my current daily ATM withdrawal limit? Once you know the number, you can plan around it, and if you regularly need more than your current limit allows, you can request a temporary or permanent increase. Most banks will approve this, often within just a few hours, especially if you can explain why you need it. This is your money. You are fully entitled to access it. The process of requesting a higher limit is simply an administrative step, not a barrier that will stop you. The second restriction. LARG cash withdrawals now trigger mandatory verification checks. This is the restriction that is catching the most people off guard, and it is the one causing the most frustration and confusion at bank branches across the country right now. Banks in the UK have introduced what they call enhanced verification procedures for larger cash withdrawals, and for pensioners, the threshold at which these procedures kick in is lower than it used to be. Here is what this means in practice. If you walk into your bank branch and ask to withdraw more than £1,000 to £2,000 in cash, and the exact figure varies by bank, the teller is now required to ask you questions. They may ask you what the money is for. They may ask to see identification, even if they already know your face. They may ask you to return the next day because they need advance notice, usually 24 to 48 hours, before they can prepare that amount of cash. In some cases, they may ask you to verify the transaction with a phone call to their fraud team before they hand over the money. Now, the banks and the Financial Conduct Authority are clear that the purpose of these checks is protection. In 2024 alone, total fraud losses in the UK exceeded £1.2 billion, and pensioners are consistently identified as the most targeted group. The kind of fraud that these checks are designed to prevent is specifically the scenario where a criminal, through a phone scam, a fake bank message, or a sophisticated impersonation, convinces a pensioner to withdraw a large sum of cash and hand it over or transfer it elsewhere. By asking, "What is this money for?" the bank is giving itself and you an opportunity to catch that kind of crime before it happens. But here is the problem. For pensioners who have never been defrauded, who simply have a legitimate reason to access their own money, these checks feel humiliating and invasive. Being questioned about your own finances, being treated as if you might be a victim when you feel perfectly in control, is not a pleasant experience. And if you were not warned this was going to happen, if you came to the branch expecting a quick, routine withdrawal and instead found yourself in a 20-minute verification process, it can leave you feeling shaken and disrespected. The single most powerful thing you can do to make this process as smooth and fast as possible is to call your bank in advance whenever you plan to make a large withdrawal. If you know you need £1,500 or £2,000 next Tuesday, call on Monday and tell them. Give them your name, your account number, and the amount you need. They will note it on your account, and when you arrive, the whole process will be significantly faster and far less stressful. It takes a 2-minute phone call. That is the difference between a quick visit and a frustrating ordeal. Also, and this is critically important, the DWP has confirmed that your state pension and any benefit payments are arriving in full, on time, and have not been reduced. This is worth saying clearly because there is a lot of confusion online right now about whether pension payments themselves have changed. They have, but in the other direction. From April 6, 2026, the full new state pension increased by 4.8% under the triple lock, bringing it to £241.30 per week. The basic state pension for those under the older system rose to £184.90 per week. Your money has gone up. The only thing that has changed is how quickly and easily you can access large amounts of it as physical cash, and that is where these new bank procedures come in. The third restriction: WP account compliance requirements and the risk of payment delays. This third restriction is the one that very few people are talking about clearly, and yet it may be the most consequential of all for those who are affected by it. The DWP introduced updated account compliance requirements that mean your bank account must be properly set up, verified, and actively maintained for your pension and benefits payments to flow into it without interruption. And here is where things get complicated. If your account details on file with the DWP do not match what your bank currently holds, if there is even a small discrepancy in your name, if your address has not been updated, if you are using an old account number that you have not used for a while, your payments can be flagged, delayed, or in some cases temporarily held while the issue is investigated. We are talking about a system that is becoming more automated, more fraud-sensitive, and therefore less forgiving of the kinds of small administrative inconsistencies that never used to cause any trouble. Joint accounts are under particular scrutiny right now. If you share a bank account with a partner and the DWP's records show your pension going to an account that now has different or additional names on it, that can trigger a fraud flag. It does not mean you have done anything wrong. It means the system has noticed something that does not match its records, and until a human being reviews it, your payment can be held up. Foreign accounts, meaning accounts not registered and regulated in the UK, are no longer accepted for pension or benefit payments. If you have ever received payments into an overseas account, or if your main account is with a bank that does not hold a UK financial services licence, you need to address this immediately. This is not a new rule, but enforcement has become significantly tighter in 2026. And there is one more element here that is directly connected to ATM access. Banks now have the authority and, increasingly, the obligation under FCA fraud protection guidelines to flag any account where they have detected unusual activity and apply temporary restrictions on withdrawals. This does not mean your account is being closed or your money is being taken. It means the bank has paused access to protect you while they investigate. But if this happens to you and you do not know it is happening, you will try to use your card at the ATM and find it declining without any immediate explanation, which is a genuinely horrible experience. The way to protect yourself against this is straightforward. Contact DWP directly through the official government website or the Pension Service phone line to confirm that they have your correct current bank account details on record. If anything has changed, if you have switched banks, changed your name, changed your address, update it now. Do not wait. A mismatch that sits uncorrected for weeks becomes a payment delay that happens at the worst possible moment, like the Friday before a bank holiday when you need to buy food and pay a bill. What you need to do in the next 7 days. Everything we have covered in this video comes down to this. The people who will be fine through all of these changes are the ones who take a few simple, practical actions right now. Not next month, not when a problem actually happens. Now. The very first thing you need to do is find out your current daily ATM withdrawal limit. Call your bank, go online, visit a branch, or look in your banking app. Write the number down somewhere you will remember. If it is lower than what you typically need, ask your bank to increase it today. You have the right to request this, and in the vast majority of cases, they will accommodate you. The second thing is to give your bank advance notice whenever you need a large cash withdrawal. Call them a day or two beforehand. This one habit will eliminate almost all of the frustration associated with the new verification checks. Banks are not trying to make your life difficult, they are trying to make sure the person asking for the money is actually you, not someone who has stolen your card or manipulated you over the phone. Third, check your DWP records. The fastest and most reliable way to do this is to call the pension service or log in to your government gateway account online. Confirm that the bank account where your state pension is being paid is the account you are currently using, that your name and address are correct, and that no flags have been raised on your payment schedule. If everything is in order, brilliant. If there is a problem, you want to know about it now so it can be fixed before it costs you a week's pension. Fourth, if you do not have access to mobile banking or online banking, consider asking a trusted family member to help you set it up. The reason this matters is not because you need to stop using cash is absolutely fine, and the government's own Access to Cash Act exists specifically to protect your right to do so. It matters because online banking gives you visibility. You can see your balance. You can see when your pension payment has arrived. You can see if there are any flags on your account. You can request limit increases without going to a branch. That visibility is genuinely protective in an environment where the rules are changing frequently. Fifth, be aware of scammers who are already using all of this confusion to their advantage. There are fraudsters right now sending fake text messages and making phone calls claiming to be from your bank or from the DWP, telling you that your account has been flagged due to the new restrictions and that you need to move your money or confirm your card details immediately. Let us be completely clear. Your bank and the DWP will never call you out of the blue and ask you to withdraw cash, transfer money, or confirm your full PIN or password. If you receive a call like that, hang up. Then call your bank using the number on the back of your card to report it. The bigger picture. Why is all of this happening now? It is worth taking a moment to understand why April and May 2026 in particular have become such a significant flashpoint for all of these changes arriving at once. The answer is a combination of forces that have been building for several years. Financial fraud targeting older people has been rising sharply. The figures are staggering. Pensioners are by far the most targeted demographic for financial scams in the UK, and the tactics being used by criminals have become increasingly sophisticated. Banks have been under growing pressure from regulators to do more, and these withdrawal restrictions and verification checks are the result of that pressure. They are, in their origin, protective rather than punitive. At the same time, the UK banking sector has been going through a period of significant consolidation and digital transition. Branch closures have accelerated. Many communities that once had multiple local branches now have none. The banking sector has been pushing customers toward digital services for years, and for pensioners who rely on physical bank branches and ATMs for their daily financial lives, these closures and the accompanying policy changes are creating a convergence of inconveniences that can genuinely feel overwhelming. And then there is the DWP side of this. The department responsible for paying out state pensions and benefits has been undertaking a significant program of data verification and fraud reduction. As part of that, the requirements around which accounts can receive payments and how those accounts need to be set up and maintained have been tightened considerably. When you combine that with the bank-level changes and the general pressure on pensioners to move toward digital financial management, what you get is the situation we are in right now. Millions of retirees navigating a system that has changed significantly and in some cases without adequate advance warning. A final word. Your pension is safe. Let that sink in. The money you have earned, the national insurance contributions you paid throughout your working life, the benefits you are entitled to, none of that is being taken from you. The state pension has actually increased by 4.8% this April. The system is not trying to punish you. But it is changing, and the only way to navigate change without disruption is to be informed and to act before problems occur rather than after. You watched this video today for a reason. You are someone who takes their financial security seriously. You are not willing to be caught off guard. So use what you have learned here. Call your bank this week. Check your DWP records. Know your limits. Plan your withdrawals. Tell a friend or family member who might not have seen this. Because the pensioners who will struggle most in the weeks ahead are not the ones who lack money. They are the ones who simply were not told what was happening in time to do anything about it. You now know, and knowing is the most powerful thing you can have. If this video helped you, please hit the like button and share it with someone you know who needs to hear this. Subscribe so you do not miss the next update, because with DWP changes moving as fast as they are right now, staying informed is not optional. It is essential.